Good morning. What's up, guys? How we doing? Hope you're all having a good Thursday morning here thus far. Let's get into it. Market just opened up about 20 seconds ago, so let's see what we get as far as institutional orders off of the open. Now, business first, as is typical around here. Flat top between 21,450 and 21,550 has been an absolute pain for the last 2 to 3 weeks. Probably closer to 3. However, in the last day or two, we've really made an attempt as a market, or I guess 3 days, to turn this flat top into kind of an ascending wedge, which is good. Okay, however, you see this big wick here. We still have not really cleared that. That is that recent high. Okay, we saw that on the 29th of May. All right. So let's see if we can kind of get through that today. I would put that kind of in the mid 8s. It's always going to be a range, and we're kind of heading into there right now. So if we can push through that today, that would be good news as far as, you know, hey, we have to keep it on the table. Maybe I'm not going to be trading on this hope, but it's in the back of my head that, hey, maybe we're kind of due to enter what I would call more of a trend market if we can get through there to begin with at all. You just got a big old push. Ninja Trader is glitching a little bit. There we go. Data's coming on back through. But that's what I'm thinking of here today. Again, market has to prove itself for me to buy into the concept of, hey, we're entering a trend market. I'm not just going to get long and hope that occurs, because that has not been the case for the last 3 weeks. Every attempt has been shot down, but it's on the table. You know, 22,000. I would call that a tier 1 level. S tier, of course, is like 15,000, 20,000, 25,000. So I'm watching 22,000 as well for both those reasons. Good morning, guys. How we doing? Giovanni, how you doing? Good morning. Scooby-Doo, welcome back. Aaron, Doug, Michael. What's up, guys? How we doing? Futures Profit, good to see ya. Dominic, C-Mac, Billgun, what's up, guys? How we doing? Bruce Lee. All the normals here today. The regulars. Hey, Step, good morning. How we doing? Maury, Patel, what's up, guys? All right, now as far as scheduled news releases here today, we got U.S. initial jobless this morning. That was, you know, that's an important read. That came in at 247. That's 247,000. And the forecast was 235,000, so that came in a little above forecast. And for scheduled news from here to the end of the day, we have no numbers. At least that made the cut for the schedule here. So a few Trump things going on. Trump is meeting with supposedly some German officials. I doubt. We'll see if we get any tariff headlines out of there. I kind of doubt it, but it wouldn't surprise me at all if we got some tariff headlines coming through that started moving things, so we'll keep an eye out there. Briefing from the U.S. Defense Secretary, and then a couple of Fed speakers midday, 11 and 12:30. So 11, we have one Fed speaker, this is Central Time. 12:30, we have 2 Fed speakers, again, Central Time. That's about it. Just a lot of talking going on today, but it's not like it's Powell, it's not like it's Trump taking the stand. It's just Trump meetings and committee speakers. So that's it. Again, no scheduled data releases for the rest of the day here, which, you know, I would say is always kind of nice, but man, this volatility has been crazy low the last 2 days, arguably the last 3 or 4 days. Roy, good morning. What's up, brother? How you doing? James, good morning. Lee, welcome back, brother. How you doing? All right, as is typical, we'll give this market maybe 5 to 10 minutes, let all the institutions rebalance everything. It's really, really tough to find edge right off the open like this. I think there's just too much randomness going on. A lot of institutions are just rebalancing for, 3 weeks out. Stuff like that. So let that clear, and then let the traders kind of take over, at least their small chunk. Taz, what's up, brother? Marshall, good morning. How we doing? Rufio making a comeback soon. Took a payout and blew up. You know, hey, listen, if you take a payout and then you blow up the account, the way that I think you should think about this is, what was the ROI on the account? Or all the accounts thus far? If it's negative, then what do you need to do? You need to get better at passing evals a little bit quicker and not blowing funded accounts as often. Which essentially just means you need to trade smaller and be more selective with your setups. That's it. But if you've gotten to a payout, you certainly have proof of concept. Okay, unless you're looking at yourself in the mirror and you're like, I got really lucky to get that payout. But, you know, with the 8 trading days, 5 minimum green days, $50 plus at Apex, they make it a little bit more difficult to just get lucky. Most of the time, if you're kind of gambling to get your payout, it's by design, which is exactly what Apex is now trying to crack down on. That is what all this drama about Apex is about. Because, you know, that business model there, kind of cycle through funded accounts with no regard to blowing them, just for the sake of getting one payout and moving on to the next account, that right there costs Apex millions a month. So they're trying to crack down on that. But for us around here who trade, you know, I hesitate to say the right way, but kind of like the right way. There's a million ways to trade the right way, right? But there's one way to trade the wrong way, and that's trade with a prop and gamble your way to try to get payouts. And that's all they're cracking down on. So we don't have to worry about anything here. Aaron, good morning, brother. Max, how we doing? All right, so my number one priority for the market here today is I really want to see volatility up. Yesterday was, in hindsight, yesterday was like one of the weirdest trading days. It was pretty uneventful, but it was just kind of an odd day for me. The market didn't move nearly enough for even a reasonable trade. I mean, it on stream, it went down, almost stopped us. Turned around, went all the way, I think 60 points. It's not like I was asking for 200 points out of the trade. 60 points in the money, got within 3 ticks, and then faded into the close, and I just had to manage it because the time was up. The market was about to close. So yesterday, pretty uneventful. Not really a big deal, but just boring, frustrating, really low volatility, especially when the trade isn't even that wide, your bracket orders, I mean, and the market just can't get to either side. It's like, at some point, it's like, just either stop me out or hit target. I don't even care anymore. Just be done so we can get volatility back. But hopefully that cleans up. I mean, listen, these super low volatility markets, they come and they're always super frustrating. For me, it's one of the most frustrating times. Because when nothing's moving, it's like you get a great entry and then it just goes sideways for an hour and a half. It's like, oh my God. But they're always short-lived. I mean, this is the Nasdaq, right? When it starts to seemingly lose attention, it always gets it back. Zephyr says, are we bearish today or is this just another trap? Well, listen, the data says, or I should say that the statistics say, when you get a move like this off the open, now granted this is not immediately after the open, but it's pretty damn close. A lot of people look at this and say, all right, time to get short for a big trend down. Now that's not necessarily wrong 50% of the time. Some kind of trend down, not necessarily a big trend down. But the other 50% of the time, moves like this, they just reverse and fade back upside. So looking at this early movement, I think is almost every day kind of a trap because it's just a coin flip. which is why I like to let this play out and then watch price action and be like, okay, what's actually going on here today? And you have to mix that, by the way, with the context of what the market has been doing, the market inertia, right? And we are in still kind of a range market with now back, keeping it in the back of our minds, potential, hey, maybe we do end up entering somewhat of a trend market, maybe, or we just reject and go right back into a range market and we'll take it as it comes and trade how we need to. Gaines, what's up, my man? Good morning. Trading Chris, One Micro Gang. Checking in. Brad, good morning. Quick question. When you used Replicanto, did you tick the market option even though you were using ATM? So far, it's worked well on the ATM settings. Yeah, so let me think, Brad. When I had less accounts on Replicanto, which I'm not using Replicanto anymore to be clear, but it's still a reasonably good copy trader. At the time, it was the best I had found. ATM was working well for, I would say, less than 10 accounts. When you start getting over 10 accounts, I started having trouble with ATM because I was getting partial fills too often. And it was really, really a pain. Because then when you'd flatten, you'd have to do it all individually because it would try to flatten the same amount of contracts the other way. But you only, if you're trading 5, you only have 2. So now you're 3 short and now you're 2 long. It's a big pain. Market, yeah, you get worse fills on average. You get a little more slippage typically. But as long as you can make up for it in your edge, which I think you really should be able to, because it's not that big of a deal. You should be fine using market orders on the followers. It's part of this game, man. It's part of trading prop. There's good and bad with everything like this. Anonymous says, I just got my Apex letter from the consistency department. Well, what did it say? Because there's a lot of Apex letters going around right now. Is this like the big, hey, we're moving you to live letter? Or is this, are they yelling at you or what's going on? How strict are they on if you sway a little from strategy? Okay, this is a good question. And contract sizes to manage market conditions. By the way, I'm watching this market. Nothing quite yet. Let's give it one more bar. See how this one closes. Okay, listen. First of all, it's going to depend on the rep you get. Unfortunately, I tend to think that some of the reps at Apex don't really trade. They just happen to work at Apex, and they're like a customer service rep, and that's just what they do, but they don't really care to trade, which is fine. There's nothing wrong with that, of course. It's just they're not really going to get it, right? So I make all my decisions with the Apex accounts in particular with the assumption in mind that I am going to get a rep who does not trade. So I have to be able to explain what I'm doing to somebody who does not trade, okay? Which means that if I'm ever going to stop myself out at break even for whatever reason, like for example, the market's about to close, the trade has changed, and I happen to be at break even, but it's time to manage early, I try to not take like a 1 or 2 tick winner because, or even worse, like a 2-point winner if I have like a 30-point stop loss. Because the rep is going to look at that and say, what is this? You're running a horrible reward to risk ratio. You're breaking that rule. And I'll say, well, no, actually, I had to manage early. And they'll say, listen, I'm sorry. Like, we have to draw the line somewhere. Now, of course, yesterday some of you guys were like, well, there's no way they don't understand that. We're all traders, so that's natural to us. That makes sense. That seems obvious. It seems very clear. That's not necessarily the case. So I try to make decisions trading prop, specifically Apex, the ones that have rules like that, in such a manner that, hey, if this ever came up with a rep, I would be able to explain my side and then they can make their decision and I'll feel good knowing that I did everything I could, even if they say no. I've never been denied a payout with Apex. Someday I'm sure that's probably going to come for whatever reason. Maybe there's some kind of glitch and it messes with my data, something. But I'm trying to put myself in the best position possible to defend everything that I do. Okay, and that includes not developing habits that on paper, even if you don't intend to, on paper make it look like you're breaking their rules. You don't want that. Assume that the rep you're going to get does not trade. And I think that makes, you know, the decision making a lot easier. All right, well, interestingly, you guys see here on a 2-minute chart, this is a 5-minute chart right here. This is a 2-minute chart. You can see we got a little bit of an attempt. I mean, that was a very clean bull bar, not for an entry, right? But it was a very clean bull bar that just retook this bear bar, and now we're looking for another leg down. So this bull bar on the 2-minute, you know, it was inside of the previous bear bar and closed at the previous bar's open. So for me, it's not like there's any kind of really edge there because no one's really winning, right? At least not in my view. But those are the kind of things I'm thinking about here. So watching this second move, it's the downside, 3 minutes left on this 5-minute bar. Jimmy, how would trailing stops play into that? Yeah, so if you could explain that you're trailing your stops out, I'm sure most of them have dealt with that in the past, and I think that would be okay. However, you know, Jimmy, you got to think, the problem comes in if you're trailing your stops in such a way that it becomes a very common occurrence where you're getting stopped 1, 2, 3, 4 points in the money, and your biggest losers are like 30, 40, 50, 60, 70 points. Remember, you know, on paper, it's going to look maybe a little weird to a rep who doesn't really get it. Because trading's complicated. You can't really expect every customer service rep at Apex to get it all. Right? And again, that's okay, but you have to, like, I think, don't adjust your trading to where you lose your edge, but adjust it so that it's super easy to explain if you ever need to. Listen, I don't say all this to, like, scare you guys. I know you guys are like, well, what if you did this? Listen, if you can explain yourself to a rep, you're like, no, listen, I trail my stops, and if they still say no and you're like, whatever, man, I'm cool with it, do what you do. I'm just saying, you know, think about these things. What's up, Danny? How you doing? Vinny, what if you stop yourself out 2 to 4 points out of the money in the red? That would be totally fine, Vinny. If you take a whole bunch of 1-tick losers, I don't see any reason at all why that should cause problems. But if you take a whole bunch of, you know, 3-tick winners, that might cause problems. Because the small losers are going to improve your average reward to risk, not make it worse. Lee, I said my strategy is to use code BIG, now pay me. It's always a pretty damn good strategy. Yeah, Peter, again, I haven't been denied a payout with Apex at this point. Again, I'm sure it's going to come someday with some kind of, I don't know, maybe there's a glitch. Something happens that messes up my data for that payout cycle. And yeah, it's not a big deal. I think a lot of people are like, oh my god, I got denied a payout. The dream's dead. No, you just keep trading for another couple weeks and you're good. Pat, good morning. How we doing? Yeah, Faba, listen, a lot of people feel that way. I get this a lot. Everyone's like really worried about breaking Apex rules. Don't worry about it. Just trade your plan. Follow your own rules. Do your best to do the right thing in the trades to make money. Again, following your plan, and you won't have issues. A bunch of people have this. They're like, man, I don't know if I want to go with Apex because like everyone's like, oh, they always deny payouts. They don't. They deny payouts when you're trading like a gambler, which is their whole problem, which is why they're now cracking down on gamblers only. Don't worry about it. Christopher, do you think it'll be an interesting... I hope so, man. Man, these last 2 days have been brutal. Not as far as performance. We performed fine. It's just been frustrating. You know, you take a trade kind of expecting, yeah, this will probably take, based on the ATR, maybe a half hour tops. And it ends up taking 4 hours. It's like, man, there's opportunity cost at some point, but there's really not because the market's not even moving. So even if you close the position, it's like, I don't even know what else I would trade. Steven, good morning. Well, we're getting some wiki action here so far on, well, more so on the 5 minute. The 2 minutes it's a little bit cleaner, I would say, right now. Keep an eye on both. And it's well past, 850 here now, so we've been able to take trades for, I mean, I opened myself up around 845, 840 if there's a good setup, 845. Nothing quite yet here. Patient, and then we'll hit it when it comes. Yeah, Vinny, it's a good movie, man. All right, Anonymous. So think about this. He says, "Does Apex?" This is a question again. I get all the time. Does Apex flag you if you change contract sizes day to day based on risk? Think about this in their shoes. If they see that, hey, this guy or this lady, she takes 2 or 3 losses, and then all of a sudden they go from trading 2 contracts to 8. And they oftentimes just make it worse. Or, they make it back and then they get to a payout. Now they've requested a payout with us. But this is what they're doing constantly. They'll trade 2, they lose 2 or 3 or 4 in a row, and then they quadruple their size in an attempt to get it all back. They're probably going to flag you for, they call it what, windfall? Like windfall / gambling. But if you come in on a day that's really high volatility and you lower your size, that's a completely different thing. Completely different. You will not get flagged for that. I do it pretty much, not all the time, but I do it pretty consistently. I change my size up, and I've never had a problem. But that's because I'm not, doing it the windfall way, where you lose 2 or 3 in a row, double, triple, quadruple your size. They don't like that. They flag that a lot. With Apex, context is all you got to worry about. But of course, don't just hard break their rules. Dominic says, if you buy a certain amount of leverage, why would they care how you use it? Because they're paying the business model of Apex. Even the funded accounts, the PA accounts, you're trading technically a sim environment, right? And then they're paying you out of a big pool of money. So they're paying the payouts from a big pool of money that they make off of people buying in and their activation fees and their evals. And then when you make money and request a payout, they take that same money and pay you out from it. So if somebody comes in, they buy, 2,300K accounts, and then they abuse them and break a bunch of rules, and they're able to pull out $1 million, that hurts their business. So that's why they care. Yes, exactly. They allow that as long as it's done responsibly. All right, so watching that 5 minute, you know, the 2 minutes kind of blocky. I mean, it's fine. It's not. But I'm really watching the 5 minute top left of your screen here. Lee, I thought I told you to watch your mouth about PDT. Didn't we? We talked about this. Kirux, would you agree it's better to skip trading for the day if your mental isn't good, even if it's not trading related? Yes. So, you know, I don't think it's... If you're taking personal days 3 times a week, that's a problem. At that point, you gotta fix. You gotta work on you before you start trading, because you're not in the right spot. And that's okay. Fix yourself up. Come on back to the screen. But I mean, yes, listen, if something happens in your life, I've said this for years. If you show up and you're like, and you sit down and you're, you know, you've been trading hard the last couple months, and it's like, it hits you, you know, not to be like a downer, but you're like sitting there and you're like, oh, like, today's the day that my pet died last year. And you're upset about it, and you're not really paying attention to the screen. Like, these are the days, I'm serious, guys. This is always the story. It's like, my biggest red day was on the day that I found out this happened, or was on this big personal thing that happened, or, you know, I was going through, someone will be like, I was going through a breakup and I lost $200,000 in one day. It's like, this isn't a coincidence, okay? It's never a coincidence. If something's going on in your life, take a day. It is not worth it. If you sit down and you're genuinely like, I can't even focus because shit is so fucked up right now, then leave. Take a personal day. You're doing the right thing. But you can't do it, you know, 2-3 times a week. You're not getting enough reps. Yeah, Michael. You know, listen, guys, honestly, I know this sounds like a pain. But if you're trading prop, and if your computer can do it, it doesn't need to be, you know, good quality. It doesn't matter. Just, I really encourage you guys, if your computer can handle it in the background, download a free screen recording software. And while you're trading, just run it in the background. And offload it to like an external drive, and just keep it. Again, it feels like a pain. It's like, now you're adding another expense. Now I have to buy this drive, or now I have to just record in 720p. Who cares? Just have something that doesn't take up a million, you know, 5 terabytes of space. Just record low quality and have it on the back burner, so if Apex hits you up, you're like, here, how many hours of footage do you want? And they're gonna be like, you're not who we're worried about. And they'll move on. Yeah, put yourself in the position of power with props. It's good, it's not a pain. You just press record, put it in the background, minimize it, you're good. Now you have everything. And by the way, it's not just for Apex. Now you can go back on the weekends when you're bored and watch your trading and be like, wow, that was really good. I should look for more of those setups this week. Or, you know what, when I took that trade in real time, I didn't see this. Yeah, I should try to avoid that this week. It's a win-win. There's nothing, no downsides. Chris, before you had a channel, how did you meet traders? I've never met another real-life person who trades. Trading, like actual trading the way we're doing it, never. Never. The internet makes it feel small, but it's not, man. In real life, it's really, really rare. To the point where, like, if someone asks what you do for a living, they don't get it. Yeah, if you guys are going to record your screen while you're trading, again, it's good to have that evidence so you can just send it to Apex and you can be like the annoying guy who's like, here, I'll send you, I have 48 hours of trading footage. You want me to just send you all of it? And they'll be like, no. like, if you have it, you can study your trades. It's a huge luxury to have all your trades on film. Use OBS Studio. It's free. Man, you can lower the quality, record it in 720p, low bitrate. You can see what's going on good enough. It doesn't take up a lot of space. It doesn't blow up your computer. I'm telling you guys, it's worth doing. So you see the 5-minute top left, it starts looking like kind of what's going on here. But the top right, that's a 2-minute. Bears are trying to put in a little descending channel here. So let's see if they can. Otherwise, I'll have to look to get long. Yeah, Chris, I mean, you know, get used to it, man. It's like I really don't want to make this comparison because it's not even close to the same thing. But like, think of it's almost like 10% or 1% of someone who's like really heavily involved in the military and they come home and they're standing around at like a barbecue and they're like, none of these people know what I went through, and they can't even really talk about it because no one would really get it. That's obviously a far more extreme example than what we're dealing with here. But it's, you know, kind of that feeling in a way. It's like you gotta kind of just like throw a big chunk of you, what you spend your whole day doing, in the back pocket, because people won't really get it. Yeah, see, John, that's like a power move. When you have all of your trades recorded, you really think, I mean, you offer it, but like now they have to make the decision, do they really want to watch it all? Like, but you have it. Here, you want it? I have every trade I've taken for the last 6 months on video. Show me another one of your customers who has that. And they'll be like, okay, you're not our problem. Move along. Well, you guys, here, let me show you kind of what I'm looking at. This again, this is a 5-minute chart. Big bear bar too early in the day. Got to let institutional orders continue to clear out. Bull bar closing inside of the previous bar. Bear bar inside of the previous bar's wick. Bull bar very small. Bear bar closing inside of the previous 2 bars wicks. Bull bar. This is a trading range, so which is why I have yet to enter any kind of like bigger swing idea. But I'm watching this trading range up here on the 2-minute. Really, we only have, you know, yeah, two touch points, I'd say. Kind of coming in here for the 3rd touch point. We'll see if that holds. Yeah. Look at that 5-minute 20 kind of right there. We still have just under 4 minutes on this 5-minute bar. It feels a lot more like a trading range than it does any kind of breakout attempt. See that 2-minute top right? It's a trading range, but it's one of those kind of bizarre, sort of undefined ones. I mean, the best thing that we could draw here, I suppose. You try to draw it like this, you end up too deep. So you're kind of stuck having to draw it like this. And that kind of turns into this. By the way, ATR here on the 5-minute chart currently is 43. Which is all right. I mean, man, the range on these 5-minute bars the last couple days, I don't know if you guys have been sitting down in the afternoon, but we have been getting the last 2 trading days in particular a lot of 5-minute bars with less than a 10-point range for the whole bar. Top to bottom, not the body, wick to wick. Less than 10 points. That's crazy. So I'm looking at this and I'm saying, all right, you know, the 2-minute's actually very helpful in this look. But I'm looking at the 5-minute. I mean, look at this. Look at this. Red, green, bear, bull, bear. So, if we're looking at the 5-minute chart, and I'm like, okay, well, let's see if we get a nice clean bear bar closing near the low down here. We'll get short, right? No, I cannot justify doing that at all. Because this is 100% a trading range. Both sides are making money just fine. Neither side is really having a lot of problems right now. So, you know, in a lot of ways, for me, if we did get a bear bar closing near the low, with a new low, I mean, here, look at the 2-minute. Like, let's say we got a bear bar closing down here. And I say, yeah, I'm going to wait for confirmation with a bull bar closing up here. Well, now I have, what, 25 points of room? So, I got to tell you, I would not be completely against just taking a stab with, you know, not huge risk. But taking a stab at buying a bear bar closing near the low because this is an aggressive trading range. And if the breakout happens, fine, just stop me and be done. But that would be a bet on the breakout not succeeding, which would be, in my opinion, the best bet you could take. Probability-wise. But here we are, we're getting a bull bar. So let's see if we get a retest the top end of that channel, which is currently kind of like the mid-50s here. Mario, good morning. Yeah, Vinny, listen, I agree, man. It's good to see some actual movement here out of the market. It's really tough to trade a dead market. You're not going to get breakouts. You know, like yesterday, we got really slow. We kind of got a breakout, you could argue, but not really. It was just a really slow grind in either direction. So it's kind of tough, especially as we get later in the day, like after I took that entry yesterday, to enter a new, really like directional position looking for a relatively large target because it's not moving. So you think your brain immediately goes to, and this would make sense. Okay, well, I need to scalp. The problem was yesterday, any channel that could have offered a scalp, you would have had to risk too much because it was sloppy, and the halfway back to the middle of the channel, right? Well, I guess back to the middle of the channel, so the halfway point, which is where you'd probably end up taking profits. It wasn't big enough to justify the risk, and the win rate, it wasn't adding up. So yesterday was just like the weirdest day, just looking at the chart, that I've seen in a long time. So some volatility, getting some back in the mix is priority number one here. Right now, I'm just keeping my eye on this. Dominic says, Nico, you ever tinkered with range candles? Not a lot, a little bit here and there. by the way, range candles, they make sense, kinda. I don't know. I'm just so like time to me just makes sense to have a timed candle, in interval. Like it rolls over at the top of the minute or the top of every 5 minutes, every 2 minutes. There's a million ways to look at this. It's just the same. It really is just the same data. But to me, when I think about it, it's like, all right, well, with range candles, you know, people might set them up a lot differently than each other. Like, for example, looking at the 5-minute chart, it's just so common. Everyone looks at a 5-minute chart. Everyone looks at a 1-minute chart. Everyone looks at a 15-minute chart. So I'm like, okay, well, I really like the 2-minute chart, and the 5-minute is a really obvious time frame that like everybody uses, so I might as well see what they're seeing. Since I'm a big believer in all of this kind of being a self-fulfilling prophecy, again, the only reason I even have the 20 EMA up here on the 5-minute chart is because other people do. That's it. Well, 2-minute up here, you can see here, better on the 2-minute. Bit of an early rejection. There's a big old flat bottom down there around 21.7. So this is now turning into a big old wedge. Yeah, kind of right ahead of 7, like 7:05. I mean, here, you look at this. I know it looks like there's maybe a lot of opportunity here, but you have to understand the way that I'm looking at this, I'm thinking, again, early in the day, let these clear. Ugly close, inside. Ugly close, right at the previous wick low. After this big wick back upside, that's not good. It's barely at the midpoint. Tiny little bull bar did nothing. Inside of the previous bull bar wick. Inside of the previous bear bar open. Close, but right at this wick and obviously inside the low. Nothing. Wicked back down to the midpoint. You know, like we need something decisive here. The market's just clearly in a trading range, but I would argue now this is a very aggressive wedge here. Flat bottom at 7:05. It's gonna break, and when it does, I'll be here to take a trade. Austin says, what does price action look like with a breakout versus just a rejection to stay in the range? Does volume show something specific or size of bars? There's a lot of things. With futures, I don't look at volume because there's so much of it. It's kind of, I always make the comparison like, if you're trading a smaller cap stock, volume is massive because it's like you're sailing over a coral reef. You should have a depth finder so you don't bottom out. So you know what's going on. In the depth, in the market depth, right? With futures, it's like being on a sailboat in the middle of the Pacific and spending half of your mental capital on reading depth. Like, that's not your biggest concern right now. So that's kind of my thought process. It doesn't make reading volume on futures wrong, by the way. Volume is always an important thing For me, I just think it's one of the less important things with everything else that we can be reading on futures. But to me, I'm more so looking at, you know, how are the Bears or Bulls able to close the bar? And what happens on the test? Do they pop through and then the Bears suck it back down for a close inside of the range? That tells you a story. So here you go. Look at the 2 minute. We just talked about this. Bulls are trying to get out. Now, contextually speaking, on the 5 minute, right now, we are right ahead of the 20 EMA. We're coming into it right now on the 5, and I know that traders watch it. You know, that causes problems, it being a popular EMA, but I'm paying attention to it. I know some bears are going to try to step ahead of it. Is it going to be enough? We'll see. But that's a relatively strong close out of the Bulls here on the 2 minute chart. Though that doesn't change too much what's happening on the 5. All right, we got 2 minutes left here. All right, 60 seconds left. In case we get a good little close here, I'm sizing down a little so I can risk the curl and just look to get long. I don't want to risk. I mean, that's a lot. That's kind of a lot of points to run 50 plus contracts. So I'm sizing down just a little bit. And let's see if we get a clean close here out of this 5 minute. Clean close would be in this region up here. Not only above the EMA, but also above this wick. And since I'm sizing down a little bit, which makes sense here in this scenario, I'm just going to risk low of day. Because if we get stopped at low of day, I don't want to risk the signal bar because this channel was very much so a thing. If we return to the channel, I'd like, you know, the trade idea is still there. But really, this is a bet, hey, can we take out high a day? So there is the rollover. And give it about 30 seconds. See if we can get a little bit of a pullback here and I'll hit it. Oh, Bulls, come on. Give me my entry. Not yet. Ah, son of a bitch, it ran without me. Man, I really like the setup. I really like the setup. Yeah, that's gone, man. That's gone without me. That's too bad. That's okay. You know, sometimes that happens. You're almost like too quick to be right, and you don't hit it in. You know, at this point, what I wanted to occur already started. And at this point, that's why I give it like 30 seconds, because the more time you go, the bulls continue to try to push, and then they pull it back. The idea has kind of changed. It's a different window. So after that 30 seconds, you know, at most like a minute. If we go 4 minutes trying to push above 21.8 and then the bears pull it on back, it's not really... In principle, it's... Well, I should say in principle, it's not the same trade anymore. You could say, well, it's the same price. Yeah, but things have shifted. I've seen too much now. So 2.5 minutes left on this 5-minute bar. We move on to the next, see what we can get. Now, interestingly, now that this is pulled away so hard, let me just talk you guys through what I'm thinking. If we were to come up and like close up here, it's like, oh, you get another opportunity. Yeah, and upside is what? We're in a range market. This is the current high of day after the bell. So am I going to risk the curl? 135 points? Even if I trade small, that's kind of a lot for, you know, I'm really asking for the thing to make a 100-point break of high. So this would become a different trade. If we do get a nice clean high close, I would just risk the signal bar and treat it more as a scalp at this point. And that's kind of a discretionary thing, because now we're too high inside of the day's range for me to be cool risking the curl. Yeah, Chris. This feels like back in the day when your whole class went on a trip and you're sitting at home ill. Yeah, it's like the one day you can't go and the president shows up. All right, so let's see if we get a clean close here out of the bulls. We're past the 50% retracement point, so I'd be totally cool just risking the signal bar, looking to tap that high a day-ish for a scalp. There we go. In there, risk the signal bar plus a point. There, I like that, and I will leave this up here for now with the intent of likely managing before then. All right, that's fine. I'm cool with that trade. Let's see if it can work out for us. Again, if we get stopped out with the signal bar, we're probably heading back down to that channel, and that's cool too. Size down a little bit still. 39 micros. Lately I've been trading like 51, 50, 51-ish total. So I'm only risking, good question actually, I'm only risking, oh, light. Risk on this trade is 2,300 bucks, which is not a lot. So let's see if this clips us. If it does, that's okay. Yeah, not a lot of continuation strength out of the bulls. That's really interesting. I mean, yeah, it was a shrinking bull bar, but it was still a very clean continuation. On a 5-minute chart, this is damn clean. There's really nothing ahead for me to second guess. So if we clip here, we're going back to that channel most likely. See what happens. Yeah, okay, that'll stop us out. So we're now flat. There we go. Yeah, we took some slippage, so that's like 24.95 loss, which is cool. I'm willing on swings, like more bigger intraday ideas to risk. I mean, last week, that bigger trade, the risk on that trade was like 8,000 bucks. I do think dynamic risk is important. Okay, again, smaller scalp idea. I'm not going to risk 8,000 on that trade. And now, you know, we spent 2,500 bucks and we now have a lot more information with this bar, is the way that I look at that. So this is a big bear bar though. Look at this. That doesn't happen all the time. You get a nice clean continuation setup and then a big old bear bar. Did we get a news headline? Nothing that was scheduled. We got a minute 35 left here on this 5-minute bar. It's a damn big bar. All right, 60 seconds left here. And by the way, if you look at the 2-minute chart, top right, remember this? I like to leave this on for at least one retest. Not that it's super relevant anymore, but when you get a retest of that, oftentimes the market does see it. About a 70-point bear bar so far on the 5-minute. Vinny says, Wrench, what qualifies as a bar too big to enter on? It depends on the context of the trade for me. Okay, now that there is a very interesting close. However, if this bar came higher in the daily range, like if this here, if these 3 or 4 bars was like up here with the same EMA positioning and this wasn't there, that right there would be a good short for me to short, risk 75 points, which is like 8,000 bucks for a big move downside, but the context is not there. We're lower in the range. It's like, well, to actually, you know, hit even a 1-to-1, you have to go well beneath low of day, more than just a stop hunting mentality. You know, the risk is big. We're getting news, aren't we? Something's going on here. And then also, you got to consider the retest here with this trend line, which we just got. So I'm going to go ahead and get rid of that. I like to clean things up as we go. I'm not getting any headlines coming through, but hey, I'm not hating the volatility. Yeah, something's going on here. We're getting some kind of headlines. Still nothing on my end. CCTV. U.S. should withdraw its measures against China. Okay. So you see, we're kind of right back in that channel. See if we can break back out of there. All right, I'll be back in 2 minutes. Coffee time. All right. Man, I can't complain. This is good volatility. But we're getting a bunch of, I don't know, a bunch of headlines out of China here. Whole bunch of nothing that's just moving things around a little bit. It's a lot of, you know, Trump should do this, the US should do this, China should do this. It's like, who cares? And you see we're trying to trade. Oh my goodness. All right, 3 minutes left on this 5-minute bar. Again, top left is your 5-minute chart. Well, there's that move we needed. Oh my goodness. That'll spook you guys probably, huh? Did that come through? China's president and Trump agree to start new round of talks ASAP. From CCTV. That'll wake you up. You know, it's like they couldn't have released that news about 10 minutes ago, huh? Why do you guys seem to be watching this while driving? I don't know how to feel about that. You're watching the stream, placing trades, and driving. All right, we got 60 seconds left on this 5-minute bar. Oh, come on, man. If we get more news, this is going to shake things up a lot. Yeah, see, Peter, this is something to think about. This is why we need... this is why we absolutely 100% need to be using live stops. Now is not the time to trade naked. You sickos. Now is not the time. Because if they actually, you know, come to some kind of agreement here, we could... Goodness, I mean... What are we going to see? 500 points? I don't know. Could we see 1,000 points? A few weeks, well, 2 months ago now. Not a few weeks. 2 months ago now, we saw 400 points in about 60 seconds on the Nasdaq. So you don't want to... You do not want to be caught on the wrong side of that. That would be ugly. Yeah, Peter, live stops only, no more limits. Since 2 weeks ago, past 350Ks, got 2 payouts. Good work. Good work, Peter. Yeah, listen, by the way, guys, if you're using what you think are live stops, just double check. Make sure they're not stop limit orders. Make sure they say stop market orders. If they're stop limit orders, if a big move happens, they will get skipped over. You want to be using stop market orders for risk management. That could be a very costly mistake. Even if you take on a massive move, like if they came to an agreement right now and you happen to be like short or something, and it moves 600 points upside, even if you take 40 points of slippage, that's a hell of a lot better than having a stop limit order that just gets skipped and you take the entire 400, 500, 600 points of heat. That could kill you. Clinton learned that the hard way once, yeah. All right, we got 2.5 minutes left on this 5-minute bar. Man, I'll take it. I'll take the volatility. It's just a little crazy with all these headlines coming through. Okay, Trump just said that he spoke with China's president on Truth Social. So I would expect that that means the headlines are pretty much done if he's making that announcement in past tense. So let's see how the market reacts to that likely being over. Baba, first time I ever started prop trading, a big news spike happened and I went into daily loss limit in the matter of my first 2 minutes of trading. Yep. Gotta use live stops. It happens. Ooh, Roy. Breaking out the breathing go. Cool, good work. Okay, headline from Trump. On Truth Social, he said the call lasted approximately 1.5 hours and resulted in a very positive conclusion for both countries. There should no longer be any questions respecting the complexity of rare earth products. All right. So hopefully headlines, as far as that is concerned, should be done. Chris, just when you're setting your hotkey or setting your hot button or however you enter the order, make sure it says stop market, or it might just say stop. If it says stop limit, that's wrong. The stop limit order should always specify it's a stop limit. The stop market order will either say stop market, stop loss, or stop. You want to be using the stop market, not the stop limit, for risk management. Now, for entering trades, stop limits I use pretty often, but that's for entries, never risk management. We may just enter a trading range here. When you look at the 2-minute, kind of what it's starting to look like here, very early stages. Nah, Michael, it's not going to be a sell market order. That's to open a position, or I guess to close a position manually. But for a stop, it'll be under order type. Willie, good morning. Jeff says, do you expect a bunch of stops to hunt at 21.9? No, I would not say a bunch because that's a pre-market level, Jeff. I prefer, I mean, we essentially already took those out. I mean, this here, where my cursor is right now, was the after bell high, and that move took those out. So now, the longer we stay beneath here, and the longer we stay above here, the more stops accumulate. So there's a bunch of stops from longs right here. Almost certainly. And there's less up here because it's only been a level for 5 minutes. Yeah, we're definitely entering a little trading range here. Kind of going sideways. 2 minute shows it really well. You get these legs, then you enter a little range. Leg, range, leg, range. Then eventually it reverses. Volatility today is much better. I mean, the range on the day is better than it was yesterday. The total range on the day. ATR on the 5 minute chart, by the way. This is a 2 minute chart. This is a 5 minute chart. ATR is 58, which is the average range in points of a 5 minute bar based on the last 10 5 minute bars, the last 50 minutes. That's pretty damn good. 58's pretty good. Been a lot lower than that lately. That's probably going to start to fall here as these headlines slow, obviously with Trump and China. But that's not necessarily such a horrible thing because this volatility has been really wicky, really jumpy. Obviously, you know, reactionary movement based on the news is often going to look like this. Okay, so we're not really having trouble holding above the high of day that was set shortly after the open. We're holding above that just fine. So what I'm looking at here is on the 2 minute, I mean, clearly the market's trying to put in a trading range. Bulls are trying to break out of it. Yeah, I mean, I'm interested, but it would have to line up well. And this would definitely be maybe a slightly longer duration trade. At least most likely. All right, we got a minute 20 seconds left here on this 5-minute bar. Yeah. All right, I would need it to say reasonably sized. Don't go popping through the high of day yet. $20 seconds. Ooh, a little bit of a wick. Yeah, a little bit of a wick back. Actually, not too bad. Give this 30 seconds. $12 seconds. Yeah, I gotta hold off. Gotta hold off, unfortunately. No trade. No trade, at least not yet. You know, I'm still intrigued by the setup. It's kind of tough because the bulls are kind of like, hey, we're in the early stages, we're trying to break this thing out. But then I look at the 2 minute and it's hard. It's like, well, to get enough confirmation, you end up high in the range. And I know the bears have more confidence high in the range. Start hitting limit orders. And that can cause a little bit of friction for the bulls. Like that. So right now, I'm interested in trying to get long, but it's the question of, well, how do I do it? I'm not big on getting long high in the range. Just because I know that we're in a range market, and if it breaks out, that's fine. I'm wrong, and it's just probabilities right now say, hey, this is probably going to range, not just shoot higher with no break. So the way that I would really like to get long is if we can see the bears pull this thing back and then give me a signal bar back upside, I'd hit in with a stop limit buy above that signal bar. That's what I would love to do right now. See if we can get that. Chris says, do you ever get long to get in the trade knowing that if it pulls back, you'll add to that position one time? Yeah, I mean, I'm not against doing that at all. However, I'd probably have to be trading small to begin with, and it would have to be a scenario where I'm willing to do both. I would never buy in a situation saying, well, you know, if I could only buy once, I wouldn't buy here. But I'm going to because I know that I can add. I would buy small, knowing that, hey, if it does pull back, I will add. But if it goes higher, I would take this trade on its own anyway, even if I couldn't add on the pullback. Otherwise, if you start giving yourself permission to do that, I think usually most people find themselves taking trades just to take a trade, knowing that, like, well, I can add anyway if it pulls back. But you have to think about each trade as a separate occurrence. Like, hey, would you take this trade on its own if you were flat and it's the only trade you could put on right now? Would you take it? I think that's how you should think about ads. Initial entries and ads if you want to be a trader who adds. Which is, again, there's nothing wrong with doing it. It's just, it's dangerous if you don't do it responsibly. If you don't trade small enough, it's really, really hard. You got to start with small positions if you want to be adding on. So just, I mean, my thought process here is, you know, like looking at the 2 minute, again, I want to get long. However, you look at the full day on the 5 minute. Since the open, we have not seen consecutive bear bars at all since the open. So if we had consecutive bear bars here, to me, that would make mathematical sense. I could, if it was reasonable and not like right at the 520, 5-minute 20 EMA that is, I could just risk the curl and look, hey, you know, maybe we get a swing all the way down through the lows. Good reward to risk and decent probability equals a reasonable expectation of edge on that trade. Very reasonable. However, if we get like a bear bar, small bull bar, doji, bear bar, then big bull bar, then I'd be trying to get long on that. Because clearly, you know, it's more of a range and it's not really looking to break lower. Just thinking out loud here. There's a lot of ideas on the table. It just depends how this develops. I mean, this here, clearly you get a clean bull bar. Bull bar with a wick. Shrinking bull body with a wick. Very common to then get a bear bar after this sequence here. Well, that's going to close as a very, very small bear doji. Alright, well now we gotta see what that brings. Really, really interesting movement here today. I think a lot of that volatility from the news is kind of dying out now. Which should clean things up. But, I mean, you look at the ranges here, the ranges are also starting to fall. Best case scenario is moderate volatility that's clean, meaning not a lot of random news wicks, not a lot of wicks in general. Even if it's a trading range, a clean trading range, not flat top, flat bottom, more of an ascending or descending, but calm, or obviously just a hard trend is always great. What we've been getting a lot of lately, though, is like a trade-off. The price action, like last week in the afternoon, price action was clean, but the volatility was dead. Yesterday, for a lot of the day, price action was not all that clean. It was tradable, but not all that clean, and volatility was dead. And now, today, we're getting better volatility, but the price action is kind of wicky because the news. So I think if we can maintain the volatility, meaning keep that ATR up. It's at 47.5 right now. If we can keep that up and then clean up the price action as the news fades out, that'll be best case scenario. All right, back in two. All right. Well, I gotta tell you, the more this market moves, the more willing I am to be a buy the close bull. So we've got 3 minutes left on this 5 minute bar. So if we can get a nice little entry, I'll pop in and give it time. Goodness, look at these pushes. All right, now remember, we're looking at 22,000. That's going to be a tier 1 level. It is something to pay attention to. It's not the end of the world, but it's something to watch. All right. All right, we got 60 seconds left here on this 5-minute bar. Market's making a hard move. All right, 15 seconds. And this is a bigger swing idea that I'm looking at here on the 5-minute chart. I'll buy that rollover. I'm going to risk this curl. And we will move this way up. Get him kind of above 22. And I expect this trade's going to take some time, okay? So I'm a little bit sized down. Risk on this trade is approximately $5,400, $5,500. So that's what we're watching. Let's see if we can get a nice little continued push. Bulls are making a nice move. Breaking out, holding the breakout. Let's see if we can get a test upside of about 22,000. Take it from there, manage it bar by bar. Actually, I lied to you. The risk on this trade is a little bit less, $5,200. 5,226-ish. So a little over $5,000 risk. I would love to get... Honestly, I'd love to get 80 to 90 points out of this guy. That would be coming into 22,000. And I'd have to watch around 22. I might just pull it ahead, depending on how strong the move is up there. But first, let's see if we can get the move going in the right direction. Tubed Out says, big bro, why not wait for a 20-point pullback before going long? Market's not necessarily calling for it. Sometimes you got to step up to the plate. You know, listen, guys, I think it took me, I think, too long to realize this. If you're, well, first of all, this isn't what it took me too long to realize, but if you're always waiting for a safer quote-unquote entry, which doesn't really exist because the price of the current market is just what everyone agrees upon. That's why it's the current price. So just because it's high doesn't mean it's too expensive. It just means, you know, your opinion is just that it should be lower. But everyone else has agreed that this is the current price. So if you're always waiting for a pullback, you're going to miss trends. Okay? And the reason we get paid in this industry is to put on risk. And if you want to make a lot of money in trading, you're going to have to put on a lot of risk. And you got to be someone who's willing to step up when maybe other people aren't willing to until it's too late. Right? So if you're never willing to step up and be that liquidity that ends up getting paid because you had the guts to step up when the market said, hey, here's one of your entries. You want it or not? And you're like, nah, I'm scared. I don't want to take that. That's too high. Yeah, and sometimes, you know, sometimes this move will pull right on back and stop me out. Sometimes that happens. And sometimes it runs 100 points and pays me, you know, a decent amount of money. But, I mean, you know, Tubed Out, a lot of this is context as well. When we're in a range market, I would absolutely do that. And that's what I was talking about maybe half an hour ago, and then the range market turned into a stronger market here. So you gotta change the idea. But if we're in like a soft, a much softer bull channel, yeah, I'll wait for pullbacks, then wait for a bull bar confirmation, maybe on the 5-minute, or just a channel test on the 2-minute to enter. But a market like this, I gotta step up. For me, it makes mathematical sense for me to step up and put it on. Now it's just a matter of letting it go and see if it can work out for us. Or if it pulls on back. What candle was that on that we, that exact thing happened to us? It was, I think... It was this bar. It was this bar we missed. Right, I wanted to get long here. I slightly hesitated on the rollover and it immediately pumped. I would have had my stop right below the low of day. And that'd have been a beauty. But if you were waiting for a pullback, yeah, you eventually would have gotten it. But if you were waiting for an instant pullback, you wouldn't have, kind of like I was. Because we just rolled over, I was ready to hit buy and it was immediately up here. Just remember, you get paid, the reason you make money at all is because you're putting on risk, because you're stepping up, putting liquidity in and putting on risk, and risking losing money. That's the only reason you get paid. So sometimes you got to do that. What's up, James? I'm doing well. How are you? Yeah, Vinny's got the idea. If you guys haven't yet, please leave a like on the stream. It is all I ask, 100% free. And it helps out tremendously. Appreciate you doing so. So again, fully expecting this trade to take its time here. That's fine, but I just, looking at this move, I gotta try to get long in the best manner that I can. Which is all we're doing here. Manage risk where it makes sense, where the idea kind of goes out the window. And to the upside, you're kind of in uncharted territory here as far as intraday, so manage bar by bar. But again, I'm really not interested in getting any less than like 80 points here. At least 70. Scrumptious, good to see ya. Yeah, we're on the 5-minute here today. Of course, got the 5 and the 2 pulled up top. You know what I should try to get? I should try to get a little dollar amount risk pop up here for the stream. Do you guys know what we're risking on each trade? I like when things are automated, and that would have to be manual. But maybe. But again, risk on this trade is about 5,200 bucks. Tubed out. What's the reward amount? I'm looking for anywhere between 70 and 100 points. So if we say 80 points, just to be reasonable. Potential reward here is well over 6. So somewhere between like 6, 7, maybe 8,000 potential reward. We'll see. Yeah, Giovanni, it would be nice to have that. You know, I'm not going to sit here and like lower my stop and be like, I want to get below that 5-minute 20. But eventually, you know, it's going to creep up. Which is thought of, obviously. Yeah, I mean, listen, obviously, we can't sit here and run the math in real time. Like, it's just not possible. It's not really a speed issue. It's just not really possible because every chart is different. And obviously, there's a million factors, random news, things like that. But to me, I think the only way to trade is to wait until you have something that looks familiar, that gives you reason to believe you have mathematical edge. Put it on. Let it play. I mean, you know, manage it bar by bar, but do your best not to overmanage your trades. That's a huge mistake. This isn't really a fallacy either. A lot of people think they're kind of like, and me too, like we all think we're smarter than our original entry. And you end up overmanaging, and a lot of times if you look back on your trades, you'll be like, man, if I had just left these things alone, I'd be making way more money right now. One sec. All right, we're back. Now with scalps, again, you are kind of managing them because your finger's on the pulse. You're closer to the market. But like when you put a trade like this on, like you're putting on some risk. Again, risk on this trade is like 5,200 bucks, something like that. I think in most cases, 90+% of the time, managing early, because you're like, oh man, I don't like the look of that, is oftentimes just a mistake long term. You have the stop word, you know, I'll speak for myself. I have the stop word is for a reason. If we break below that curl, my idea kind of goes out the window in a lot of ways. But if we see a couple of bear bars here, and like, let's say we closed here, if I was like, I'm going to manage this early at a 4-point loser, I'm not really giving myself the room I intended. I already took care of the management when I set the stop. Now, there are some cases where it's like, and I get this question a lot, when would you manage early? If we had a setup that was very clearly a setup that I would take short if I was flat, but I'm sitting long, on what would be the short entry, I will sometimes close the long because I would be taking it short, and now it just gets confusing. But that doesn't happen that often. Far more often, it just happens that people manage early, and turns out it was a mistake. It makes the numbers look worse long term, which is obviously an emotional thing to get over. Now you see those orange bars at the bottom of your screen? That is the range of each of these 5-minute bars, and it is low. It is falling. That's all right for now, though. Yeah, Giovanni's asking a question that we're all kind of trying to find the answer to forever. If you did manage early in your example, would you reverse the trade? Meaning, if I saw a setup that I would take short if I were flat, would I flatten the long and get short? And Giovanni, the right answer to this question is yes. Technically, we all should. That, for me, is one of those things that kind of tends to mess with my psychology. And not many things at this point do. That does. Technically, I should in that scenario. However, it's really, really, really frustrating when you flip and you end up being wrong on both. That's a trigger, I think, for a lot of people. It's kind of a trigger for me. Again, not that many things do that to me at this point, but that one can. When you flip and it ends up, the original was right and now you took losses on both, that's kind of tough. It's kind of a trigger. Nico, first day trading my Take Profit Trader account. Use code BIG for the best deal always at Take Profit and Apex. Using TradingView through Tradeovate though for the ease. Yeah, good setup. I'm a huge fan of Take Profit. Take Profit's really cool because you can get those payouts daily. And by the time you request it and when they approve it, you just press proceed and the money is in your account before you open the app, basically every time. Yeah, flipping position direction it's a tough thing. Again, technically, if we were computers, it's the right thing to do, and I will sometimes do it. But it's very upsetting to me to flip and be wrong on both. It's really tough to be like, okay, like, had I done nothing, I would have made money, and now I'm red because I flipped and was again, right thing to do. Oftentimes too upsetting for humans. One sec here. All right, we're back. Clint took my first take profit trader payout. Let's go. Clint, it was smooth, right? It's a very smooth process. It's really nice when that hits your account. Yeah, volatility's down, but still like the trade. Still makes a lot of mathematical sense to me, so I gotta let it work. Again, risk on the trade is 50, 200 bucks. Potential profit is anywhere between, I don't know, probably 6 or 8,000. So we'll see what ends up working for us. Again, we're still pretty close to break even on the trade. There's the open P&L as it sits right now. Just about 6 points in the green right now. 5, 6 points in the green. See if we can kind of get a second leg up here. Push us deeper in the money. And on that 2 minute, this is flat. Look at that. Goodness. Okay, money, pass the eval. Good work. Yeah, volatility's a little bit low. There you go. Bear's trying to take this lower. Nick says, I've passed 6 evals but can never get past the threshold of the funded accounts. Nick, are you trading the evals aggressively or very conservatively? And then are you trading the funded accounts the same way? A lot of people, Nick, what I see them do is they trade the evals really aggressively and they pass like every other eval or every 3 evals or something. And then they get to the funded account and they trade the exact same way. And it's harder because on the evals, you can pass in 1 day. But on the funded accounts, they force you to increase the sample size by trading for a minimum of 8 days and having at least 5 days over a $50 profit per day. So they're forcing you to increase the sample size. So if you're trading the funded accounts just as aggressively as the evals, bigger sample size, risk of blow up skyrockets if you're trading too big. So what I do, I can only speak my truth, is because of opportunity costs. I don't want to spend a week in an eval. I just trade the evals aggressively, size them down into the finish line. Okay, so the first trade is the highest risk, and then I size down into the finish line of the eval, get into a funded account, and then go right back down to my small size. Scale horizontally, not vertically mentality. Right, that's what I do. Todd, do you ever get tired of saying scale horizontally rather than vertically? It needs to be a slogan post on the screen. Nah, I just think it's the way to go. By a long shot. You have to understand that these props would love if you just tried to scale vertically, because you'll blow up. I mean, the reason these props are in business is because of statistics. So don't play the game of the people who are making them profitable. By the way, that doesn't make them wrong or evil. It makes them a business. And it's a very fair opportunity. Just be smarter than everyone who's making them extremely profitable. And be more patient is, I guess, the better word, rather than intelligent. You don't have to be a genius to be a trader. In fact, in a lot of ways, being like, quote unquote, like dumb, like staying as dumb as you can, right, almost makes you more like an algorithm, less emotional. Hey, just do the right thing when it's time to do the right thing and move on. Yeah, of course, the right thing based on your plan. There's always two sides to every trade, so if I were to say right thing in a general context, then that would be factually incorrect. But the right thing based on your plan. Yeah, it's like as soon as I entered this long, volatility died off. It's okay. Nothing's changed for me. I gotta let it sit, let it work. But yeah, ATR here on the 5-minute chart is currently sitting at 32, 33, 34, mid to low 30s. We're just getting down there a little bit. Few headlines here coming through from Trump regarding Germany. Not much that's going to move things, at least not yet. I hope not, man. I hope we see some volatility increase here. Listen, with these really sideways channels, they always, of course. And usually the break is relatively aggressive once it can actually hold the breakout. Can it hold it? Let's see. Just as we're talking about it. Come on now, Bulls. You know you want to test 22. You know you want to see 22. Yeah, I mean, right now, like, you look at the 2-minute chart, the range is so tight. Any breakout, you're gonna see limit order bears stepping in on breakouts higher, and limit order bulls stepping in at breakouts lower, until the breakout becomes undeniable enough. So the more tests you get outside, usually the other side tends to start laying down a little bit more. But I'm letting it sit. Slow, slow, slow. See, the last few bars are starting to expand a little bit as far as the range at the bottom, those orange bars. So I think a breakout's coming. We'll just see which direction it breaks. Well, this little range is something else, huh? I mean, the 2-minute really shows it here. And I do fully expect this trade to kind of take some time here. So, I mean, listen, you guys see where I'm sitting, right? That's how the trade is currently structured. I'm going to leave it as such. I'm going to go hit some lunch and let the market do its thing. So, that's how we sit. Got to break one way or the other, but I'm mathematically, I'm sitting how I sit and see if it happens to work out this time. But I know this trade does have edge for me on a big sample size. So anyway, guys, listen, hey, make sure you use code BIG at Take Profit Trader Apex. It will always, no matter when you use it, give you the best available deal, which happens to be 30% off, no activation fee right now at Take Profit, 71% off, and single day pass at Apex. And hit the like on the stream before you head out so it pops up for you tomorrow morning. All right, guys, hey, go big in this market. It's maybe a little tougher to go huge. We're going to try to do it anyway. All right, guys, appreciate you hanging out. I'll see you. Subscribe to the channel tomorrow morning, 8:15 a.m. Central Time. Have a great rest of the day. All right, guys, see you soon. Have a good one.